Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. Today, we are going to look at the Dow Jones Industrial Average Index futures contracts for June 2020. Today is May 21st, 2020. So, this first chart that we're looking at right here is the 15-minute time frame. And basically, as you can see from it right here, starting at this move all the way down here at the bottom around the 14th of May, it pretty much went straight up. And then for the last past one, two, three, about 3.5 trading sessions right here, three and a half last days, we've been in a consolidation range right here. You can see it's broken out to a high a little bit above the high, broken out down below the low of where I have just the support and resistance line set up mainly for reference for myself. But since then, it's pretty much been inside the whole time, so just gathering up contracts before it decides which way it's going to go next. What I'm looking for is I'm looking for a move to the downside index. And there's two main reasons why here looking at this 15-minute chart. So starting off down here before this move went all the way up, you see from right there, that pivot low to that pivot high, came down, hit the 38% line, came up, hit perfectly off of the 1.272 Fibonacci extension level for the first exit. And then the second exit, which doesn't necessarily get hit all the time, but it is what I look for, is just above the 200% level, which is that line right here. In yesterday's video, I explained the Fibonacci retracement and extension levels I'm currently using that are a little bit different from the ones that were before. So this is the 200.58 level, a little bit over 200 right there. But you can see it ticked off right there, and ever since then, it's been in a consolidation range from that move right there. So then if you wanted to continue to move that up for it, then the next support level will be down here at the 38.2% at around 23,978. But one of the short setups that I do look for topping action right here is, again, I explained it yesterday in yesterday's video regarding the overview of the S&P 500. What I was looking for that is you come up here, you have this spike high, comes down, makes a low right there, and then this high up here does not come up and get broken. So using this trend line up right here, see it's drawn up to it nicely. Price has started closing a little bit below right there. Not sure if it's going to be a fake out or not, but the move below hasn't happened. But since price has broken below that trend line, it is showing a little bit of weakness to it, coming out of this consolidation range. So if this does turn out to be the short setup when this thing breaks lower here, the level that I will be looking at for the first level would be around 23,573. This is a 1.272 Fibonacci extension level. And then for the second level, which doesn't necessarily have to go down and hit, but definitely could, be down here at the red line at about 22,830. So definitely going into Friday's trading session and then Monday and next week, as long as price doesn't come up and make a new high up here and break this blue line of about 24,780 or so. I'm looking for short side of the market right here, and this is the 15-minute time frame for it. And then if we go on over to the 2-minute chart over here, again, not a whole lot new. Today's trading range is pretty much just a big range day. Started at around 24,554, went down to a low of around 24,303, spiked up to a high, back down to the low real fast, and then just ended up waffling around before it finished off the day. So a lot of movement, but at the end of the day, there wasn't a great change in the price for the Dow Jones. But moving forward uh, into next trading session tomorrow, looking for a short side. The only caveat I'll be looking for is if price comes up and breaks breaks this level right here about 24,540, then I would start looking for some type of retracement long trade. So if price goes up there and breaks that, then I'd be looking for eventually retracement. Let me try to get this arrow to work. Come back down, hit somewhere between the 38 to 61.8% level, and then go up and look to hit that target somewhere. But let me draw this on right here. But that's going to be the key for it right there, is looking for this level to get broken on this current move, move up right there. If it does, then we'll be definitely looking for at least a long trade to the upside. And if the price continues to go up and breaks its high right here, then this move right here down to that short side will be invalid, and probably the trend will resume back up again. But currently the boss I'm looking for is more short side down here, the downside. Let me draw that Fibonacci extension level on it down there, and if it does come up, breaks down, then the first exit again, it's 23,574. Second level we're looking for to be 22,835. Let's go to the weekly chart here real quick, show you what's going on over there. Super long term time frame. Basically, not a whole lot ever since we had that big sell-off. Price came down, hit off the 50% Fibonacci retracement level perfectly. And ever since then, here looking on the weekly chart, has just been grinding up slowly and steadily. One thing to note that we also have a similar setup over on the S&P 500 chart is we do have that gap right here, and on the Dow Jones, it's from about 28,857 down to around, what's the high of that? 28,754. So that's another reason why when everyone is saying how they're looking for a huge market sell-off, I mean, we definitely had a good size one down from 29,563 to about 18,244. So definitely a big one, but I was looking for like this huge major one that a lot of people were talking about, specifically because we still had this gap up here to come and be filled. So I've been saying all along that if a huge sell-off is going to happen, it won't be till after at least this gap comes up here and gets filled. Again, I can be completely dead wrong with that, but that is what I was looking for, or I'm still looking for that. So until, excuse me, until that gets filled, I'm still overall long-term bullish on the Dow Jones and on the S&P 500 chart. And the setup that is currently in right here is a perfect 50 back long trade right here. Hit off the 50% level right here. And so that current exit for it is going to be at the 1.272 level, which is about 35,806. So if this is, true setup for it, as you can see, it started off way back after the financial crisis over here, came back down, had that first spike low. There comes the second spike low. So then once, let me draw this here real quick, the high on there. So there's the spike low, spike low, move up. Actually, it'd be about right there. Spike low, move up, spike low. Once this line gets broken, then I'm looking for it towards the upside. And the first long entry was right there, came down, hit the 38% line, came up here and hit the 1.272. Then we can go up here and see it was just such a strong setup. It even blew past the 200%, no problem at all. So then I just keep on moving it up, moving it up. It wasn't until we had that big sell-off that it went and initiated it here again. So that is why I'm looking for super long term, bullish on Dow Jones, and looking for around 35,000 based upon that setup right there. So that's the Dow Jones Industrial Average. It's May 21st today. Got one more trading session left tomorrow. For the U.S., it's probably going to be a lot slower. It's going into Memorial Day holiday weekend, so already a lot of people taking off. So stay safe, have fun, and I'll talk to you later. Bye.